Big news of the day, we have GDP numbers out and they are weak. We also have the FOMC concluding this Wednesday. Peter Hug joins me now on the line. Peter, good to have you back on the show.
You're welcome, Daniela.
Peter, let's start by speaking about the advanced first quarter GDP figures that came in at up 0.1%. Many were expecting 1.1% here, so weaker GDP. And I know you were saying offline you were expecting this to move gold at least $40 on the upside, which we haven't seen.
Well, in my commentary this morning, I continue to feel that this market is heavy. It's been underpinned by Ukraine, and any flash news stories coming out of the Ukraine has created short covering. We saw that spike last week when gold moved up $30. But as that situation in Ukraine sort of leaves the headlines, the focus is on sort of the economic recovery of the U.S. And my commentary this morning, I was leaning towards this market still being heavy because, the economic numbers that have been coming out recently, and including the ADP number this morning, which showed an increase in private sector jobs of 220,000 for April, indicate to me that the economy is still healing. Right after the ADP number, we had some very dismal GDP numbers for the first quarter at 0.1, which is the worst rate in well over a couple of years. And that, in my opinion, should have created some serious short covering on the metals.
Right now, Peter, typically a weaker U.S. economy meant good news for gold, which we're really not seeing. What do you think is preventing gold from rallying here?
Well, it's really a matter is the number a real number? And, I'm not sure that the traders believe it to be a real number. And a lot will depend on how Yellen interprets the numbers, when we hear some of the Fed speak this afternoon. But I think they're going to blame a lot of this stagnant growth in the U.S. based on the weather. I still think they're using the weather card. And I do not believe that we're going to have, a real picture of this economy until probably for another couple of months, or at least until second quarter GDP gets posted. So, in that context, if this was a weather-related number and the economy is stronger than most people assume, that will create a headwind for gold, because then I believe the Fed will continue on its tapering course.
Peter, speaking about the FOMC, yesterday I attended a talk by Gerald Corrigan. He's the managing director of Goldman Sachs, but he also served as the former president of the Federal Reserve of New York. And he was saying how the Fed's wind down of these extraordinary policies could prove to be both difficult and risky. What do you make of these comments?
Under current scenario, and that's all I can go by, I would expect the Fed to continue its policy. His point that the Fed trying to normalize interest rate policy over the next few years is going to be a difficult task, I totally agree with. I do believe there are going to be a number of hiccups along the way. But if the question is to the tapering policy, I don't see the Fed changing course, at least not at this meeting.
To wrap up now, Peter, gold struggling to hit that $1,300 mark. What do you think will be needed to hit the $1,300 level, to hold it, and to move higher?
Well, the obvious thing would be a change in Fed policy. Again, I do not expect that. The second thing that is still there, although it's not hitting the news headlines yesterday or today, is the Ukraine situation. That could still create some serious issues. And I don't mean war issues. I mean more economic issues for the European economy if Russia pushes back. So, that's still on the table and creates an underpinning to the market, which will prevent some aggressive short selling here. But the fundamentals, the physical offtake on this market is basically non-existent. We're seeing very, very little demand coming out of China and the Far East, and North American physical demand is virtually absent at these levels. So on that context base, the market still continues to feel heavy to me. Again, with the proviso that, the flashpoint in Ukraine or any change in Fed policy, which I do not think will happen, but if I'm wrong, if it does happen, would be the catalyst that would create some significant short covering and then take gold over 1,300. But we need that 1,325 level of gold taken out from a technical perspective to give this market some momentum.
Well, we'll see what happens this afternoon, Peter. Thanks so much for joining us.
You're welcome, Daniela.
And thanks for watching this edition of For Pete's Sake. You can email us at newsfeedback@kitco.com. Thanks for watching.